Dollar is trading with a firm tone today after the US Fed and the Bank of England were not as hawkish as previously thought. And with central bank expectations steadying, Australian dollar yields are again looking appealing. But how then are commodity prices playing into this mix? Well, Marcus Helsing of JB Markets joins me live in the studio. Marcus, good to see you.
Good to see you, Helen.
In this wonderful southern city of Melbourne. Now, Marcus, just tell us about this $1 US dollar, because it has sort of moved around a bit.
Yeah, look, I mean, it is numerous factors at play in the moment. I think having iron ore at $65 a tonne is a big help. The terms of trade is probably the most dominant factor. I mean, we always hear the interest rate differentials. To us, this is not that important because we're talking about very small interest rate difference in the first place. But the terms of trade is the main driver. On the other hand, the US dollar, we believe, is a currency that's just looking at a cliff face. So we think technically and fundamentally the Americans want a weaker US dollar. We can see it in Euro-US action, for example. So Aussie-US to us is playing around in a range now for 1.5 years, between 70 and 77 cents. We really believe there's a very, very fair chance for a break of 77, 77.5, and ultimately 80, 82 cents. So that's, to us, pretty much on the agenda in the next few months.
But that is not good news for Australia's exporters.
Well, correct, but I mean, at the end of the day, you always get what you deserve. And in the moment, I mean, we have iron ore at $65 a tonne, and the terms of trade has improved. And I mean, quite frankly, Australia is actually doing not too badly considering the amount of investment that dropped away the last few years. So I mean, really, Australia is chipping away. We get all the negative news about the high household debt and whatnot, and about China risks. That might all be down the track, but at this point in time, maybe Australia is a buy.
Yeah. How vulnerable do you think the greenback is?
Very, and in particular, it has got no support from the government.
Yeah.
And also, I mean, we see always these weak wage growth discussions. It's quite obvious that you have a Federal Reserve, a Bank of Japan, European Central Bank. They don't know how to get out of all these assets they're sitting on. They're trying to gently unwind. Now, we all know when you do something...
Well, even more gentle. I mean, we're sort of hearing return to dovish talk.
Correct. So, look, we really feel this is... We are in uncharted territory on all fronts, in particular from the central banking point of view. And that's why I also mentioned gold and all that later on to you. But really, as far as the Aussie dollar is concerned, we believe the Aussie dollar and Australia in the moment is a buy.
All right. Now, let's talk about some of those commodities. Can we start with copper?
Yeah,
What's your feeling?
Of course. Well, Dr. Copper, as it's known, I mean, it's really a great indicator for Australia in particular. I mean, you rarely see an Aussie dollar rallying without copper going with it. So to us, really, I've spoken to some engineers overseas last night, and with all this sort of move towards electric cars and all that, I mean, the broad basis for demand for copper will not fall away.
No.
If anything, it will rise.
Yeah.
And so you see it in the price action of the last 12 months, bottoming out, technically speaking. We're actually very bullish on copper. So if that breaks sort of the 270...
Well, in a sense, from what you're saying, though, that's not surprising that you would be bullish if you think there is this ongoing market, particularly in the way cars are moving, but also, you know, other ways that copper is used.
Correct. And I mean, but at the end of the day, price action really does tell. I mean, the numbers do the talking as well. And we really feel there is one more big rally ahead of us.
In copper?
In copper.
Okay.
And
by when, sort of?
Well, look, I mean... Speaking to some of our colleagues, like on the FX arena, like Jackson Capital, for example, they're very strong on the Aussie dollar as well on copper. We really share this view, and we really believe copper could see a break as early as the next few weeks.
Wow.
To be honest.
All right. Gold. Let's talk gold, because it's really been, you know, there's been this move into safe havens and then move out again.
Look, I sometimes sound a bit foolish being a long-term bull on gold, because obviously we've had this range trading going on for quite some time. The recent sell-off really has been a bit of a gut wrencher for some. We really feel this could actually be the end of a major downtrend. It's a bit early to say. We just like the price action as of this week. The sell-off in silver, it started with some sort of a fat finger sell-off out of Asia, and ultimately we revisited the low. Look, the bounce back to us is strong. We need convincing follow-through, and look, on the long term to us, it's got to be a key holding of any investor.
Do you like ETFs in
Yes, I do.
Gold?
I do. I mean, in particular, if someone doesn't want to bother having to buy a lot of small cap stocks like the Fennec Junior Gold ETF, to us is a great way of getting the toe in the water. It's performing well in terms of its mandate. With every ETF, I think there's good and bad ones, mainly because some managers don't really have a mandate that they follow as well. So clients have to be, or investors have to be careful in picking. We feel the Fennec ETFs, they follow their mandate properly. But look, at the end of the day, it's up to everyone to check it out.
Yeah,
but,
of course.
You know.
Because we know that the Reserve Bank and other regulators are a little bit concerned about some, the massive growth in ETFs, and particularly if they go into smaller, sort of more illiquid indexes or whatever they're following.
Understandably so, and also they become a major impact on some of the small cap stocks, as a matter of fact, like Silver Lake has been pushed around big time by Fennec, for example. But look, it gives investors a chance to really be exposed to small caps, and they're the ones, when gold does shine, they will take off.
All right, now oil, before we finish.
Oil, look, oil is, we're all aware of the fundamentals, or we're not aware because you don't really know everything about oil. But the fact is there's a lot of oil around. There's a lot of talk that we don't need it anymore, which we believe is very premature. Look, it's in a range. It's a $42, $48 range, currently around just below 46 at $47.5 a barrel, West Texas Intermediate. We feel there is ultimately a break coming, and we believe this break will be to the upside. But in the meantime, really, we've got to wait and see.
All right, Marcus Helsing from JB Markets, thanks so much for joining us.
Thank you, Helen. Thanks for having me.